Hi. Now let us consider one more illustration wherein you'll be asked to prepare fund flow statement without adjustments. It's very easy and simple to understand. Let us move on to the question. Now let us consider the case of ROM traders, where the balance sheet of two periods, that is 31st December 2018 and 2019 is given. And the question is, you are asked to prepare statement of sources and uses of funds. So when you look at the liability side, the firm has share capital, which has increased from 80,000 to 90,000. Creditors, there is an increase in creditors. That means we managed to get more credit. It was only 20,000, whereas it has gone up to 46,000. And the profit has increased from 4,60,000 to 5 lakhs. So there is an increase of 40,000 in profits. Similarly, on the asset side, we have cash. Cash position has increased from 60 to 94,000. And the debtors, that is your investment on debtors, that means your credit sales, has declined from 2,40,000 to 2,30,000. There is a fall of 10,000 on your investment on debtors. And your investment on stock has increased from 1,60,000 to 1,80,000. A net increase of 20,000. And in case of land, it looks like there is an additional purchase of land, because of which your investment on land has gone up from 1 lakh to 1,32,000. So, using this information, we have to prepare sources and uses statement, otherwise called fund flow statement. So first we have to prepare schedule of changes in working capital. Schedule of changes in working capital. Working capital is the circulating capital required to meet the day-to-day requirements, which is normally the difference between current assets minus current liabilities. So first let us consider balance sheet information pertaining to current assets. In 2018 for the month of 31st December. In both the periods, 31st December. Books of accounts are closed on 31st December. So let us go by the information. Cash 60,000, 94,000. Cash 60,000 and 94,000. So we'll write here increase in working capital, decrease in working capital. So increase in current asset means normally to be taken as increase in working capital. So there is an increase of 34,000 in working capital. As far as cash is concerned, then in case of debtors, it's given as 2,40,000 at the beginning and 2,30,000 at the end. So there is a decrease. Increase in current asset means should be taken to the increase column, and the decrease to be taken to the decrease column, 10,000. So because of your fall in your investment on debtors, your working capital requirement has decreased by 10,000 rupees. That is why it is shown on the decrease column. And in case of stock, you have increased your investment. from 1,60,000 to 1,80,000. That means we have made 20,000 rupees investment more. To that extent, working capital need would arise, increase. Working capital need would increase. Working capital need will increase. So every increase in current asset indicates the need for working capital, and every decrease in the current asset indicates there is a kind of a fall or a decrease in the working capital requirement. So now let us find out the total of current assets. Is there any other thing in terms of current asset? There are only land is a fixed asset. Whereas these are all current assets, cash, stock, debtors. There are only 3 items of current assets. I am just finding out the total of it. 4,60,000. Here 5,04,000. This is nothing but total current assets less current liability. So let us now check the question for current liability. So share capital is your permanent capital, your long-term liability. Profit and loss account is the result made from your business, whereas creditors are your current liability, which has increased from 20,000 to 46,000. Increase in current liability means decrease in working capital. So to the extent of 26,000. The difference is 26,000. I am just entering it as part of decrease column because you are getting more credit. So your working capital requirement would be less because the amount of credit that you enjoy from your suppliers, your requirement of working capital would be less, will decrease. So that is why it is shown on the decrease column. So I am just finding out the difference between total. There is no other item other than this 20,000. So working capital 40,000, whereas here it is 4,58,000. Whereas when you find the total here, the total of increase column is 54,000 and the total of decrease column is 36,000. It is very clear that you are managing your business with a working capital of 4,40,000 in 2018, whereas you required 18,000 more to manage the working capital in case of 2019, because there is an increase of 18,000 here. So I am just closing the account, transferring it over here, and the difference is 18,000, 4,40,000 and 4,58,000. There is an increase of 18,000. So my observation is increase in working capital requirement. Similarly here, if I close the increase column has the greater balance. So first I have to close the increase column. It should be balanced with the decrease column. In case a decrease column is greater, first you have to close the decrease column and balance it with the increase column. Here the increase column amount is greater. So first I am closing the increase column and transferring it over here and just comparing the difference. 18,000. So in both ways, I'm able to observe that the increase is by 18,000 in case of working capital needs for this business. So this is one part of calculation where we are adjusting and calculating the increase or decrease in the working capital requirement by preparing this kind of a schedule. So this is the first part of your calculation to prepare the fund flow statement. Now let us move on to prepare ledger accounts for non-current items. So ledger accounts for non-current items. To know its impact on the fund position, its influence on the whether it has increased the sources or increased the applications, we need to know. So we have to prepare ledgers for all the items in the other than current assets and current, because current assets and current liabilities have already been adjusted and we have arrived the net result of it. Now let us deal with the non-current account items. First is share capital. So 80,000 and 90,000. So I am preparing a ledger for share capital. Share capital account. It's the credit side. Share capital being liability side item, opening balance will always appear on the credit side. So by opening balance, $80,000 closing balance, $90,000. That means the greater side, it's a mere ledger balancing. So I am closing the debit side. There is no other information with regard to share capital. I'm just closing the ledger. So 10,000 is your additional issue. You have realized rupees 10,000 by making an additional issue of shares. So this is nothing but this will increase your sources of funds to the firm. So by issue of shares or share capital account, bank account. This will be added to the bank account. Your bank balance will increase by this amount. This should be taken as part of sources. This will increase your sources of funds to the firm. So this is ledger number 1. Then second ledger for the profit and loss account. So there is profit increased by rupees 40,000. So when you prepare ledger for P&L account, by opening balance, 4,60,000 and closing balance 5 lakhs. As usual, first we have to close the side that has greater balance. It's similar to that of ledger balancing. So 5 lakhs. So there is 40,000. This is nothing but funds from operations. By fund from operation. This is also part of sources. Ledger number 3. So we have already done with the share capital, profit and loss account. and land account. So this is a basic question where there is no additional information. It's a straight and basic question. We are simply preparing the ledgers and we will be taking it up to the fund flow statement. The balances will be taken to the fund flow statement. So now I am doing land account. Land being asset item, opening balance on the debit side. To opening balance, 1 lakh by closing balance, 1,32,000. So asset items will always have opening balance on the debit side, and the liability items will have opening balance on the credit side. So there is some, if at all it is given in the question that some part of land was sold, some information is there, some additional, we have to carry it out. Here there is no such information pertaining to the asset. So we are just closing the ledger to find out the difference. So here you get balancing figure on the debit side, 1,32,000. That means the difference is 32,000, nothing but purchase of asset. Purchase of land. So this will impact on your bank account. You would have paid some money. So this is nothing but application part of it. So now we can prepare fund flow statement. It is similar to that of a balance sheet. Whereas here on one side we will be writing all the sources from where we managed to get funds, and the other side is application part. This is sources side and this is application side. In the sources from where we got money or funds, and the sources from where for which we applied our fund. Okay. So first, in case of share capital, by issue of shares we managed to raise fund. So issue of shares, 10,000, and fund from operations, shortly called FFO, fund from operation, is 40,000. And on the application side, purchase of land, 32,000. And we already calculated that there is an increase in working capital needs, which tallied in both the methods. There are two methods or two ways by which we prepared the schedule. In both ways, we observed that the requirement was tallying, which was found to be at 18,000. So this should be reflected increase in working capital on the application side. Increase in working capital, 18,000. So the cash flow statement should tally. So what does this communicate? So the firm has managed to raise fund by issue of shares to the tune of 10,000, and the operations have resulted in a source of rupees 40,000, which was used to fund the working capital needs by 18,000 and for the purchase of land by 32,000. And while preparing schedule of changes in working capital, you must keep in mind that general rule is increase in current assets will always be reflecting on the increase in working capital, will impact on increase in working capital, increase in working capital, and vice versa. Obviously, the decrease in current assets means it will reflect on the decrease side of the working capital, as we did for debtors. Whereas in case of current liability, increase in current liability implies decrease in working capital, and vice versa. Decrease in current liability means increase in working capital. Here there is an increase, so the difference is shown on the decrease column. The reason, because you are getting more credit, that means your fund for operations for working capital needs would be less. The need for working capital will be less when you are getting more credit. Supposing there is decrease, say for example from 20,000 to this has decreased to 15,000. In that case, you would have required cash to settle the creditors. So in that case, your need for working capital would increase when there is fall or decrease in the current liability. So now you must be in a position to understand as to how to prepare a fund flow statement. This is the answer, final answer, fund flow statement, which should be prepared after doing this working. These are working notes number 1, 2 and 3. First, we prepared the schedule of changes in working capital to know the increase or decrease in the working capital requirement. And we observed that there was an increase in working capital requirement by 18,000. In this case, in Ram's Traders. And that 18,000 was shown as part of increase in working capital here in the fund flow statement. Whereas by preparing ledgers for the non-current items like share capital, so then we prepared ledger for P&L account to find out the funds from operation, and land account to know the result. The result can be either purchase or sale. If balancing figure comes on the credit side, it is going to be sale of land. Whereas here, the balancing figure appears on the debit side, which means additional land was purchased. So this is how the fund flow statement is to be prepared. Hope you are able to understand the methods involved in the preparation of fund flow statement. Thank you.